It's your morning market hit for Monday 6th of June. It's 9 AM London time. So what matters for markets this week? What should we be looking at for those that want to trade markets on a 1 to 2 week basis, that swing trading style that we look at in the daily rag each and every day? Oh, and by the way, please click on the subscribe button if you like these videos and share them across social media. It's all free content. So is this a bear market rally? That's the question everyone's asking. Is the rally from the May 20th intraday lows something to be sold into, or indeed a rally to be jumped on? Are we in an enduring cyclical bear market similar to what we had in 2000, 2002 and the GFC 2007 to 2009? Or is this simply a typical pullback within a cyclical bull market? We would label it a phase 2 of a stylized cyclical bull market. A bit like 2004, but accentuated and exaggerated a bit by the war and a couple of other things that are going on. Well, all of those questions we consider in our regular weekly work when we think about markets on more of a longer term time frame. Indeed, the tactical equity asset allocation, which looks at markets on a 1 to 4 month time frame, we're putting up the cover in front of you now. This was updated and published last week and considers those very exact questions, all of which is available to subscribers to our longer term work. But for swing traders, 1 to 2 week traders, that's not necessarily quite the correct question. For those who think about markets on a 1 to 2 week basis, the real question is, are we consolidating our gains from the 20th of May intraday lows? Of course, we bounced very hard from 20th of May all the way through to early last week. Since then, we've been consolidating. We've been in a range-bound price action in the S&P 500 and the Nasdaq 100. You can see that in the charts in front of you now. The S&P 500 range-bound between 4,070 up to 4,200 over recent trading sessions, and the Nasdaq 100 similarly tracking a consolidation range in the last few trading sessions. And indeed last week in aggregate, if you looked at the US equity indices, it was a bit of a mixed bag, mostly giving back a little bit of their gains, down 1% or so, as you can see on the indices and the chart in front of you now. Not significant losses, a little bit of give back, not dissimilar as well across Europe. So really the interesting question is, how are the models evolving over the course of the last week? Those 1 to 2 week short-term models that help us do that swing trading that we talk about in the daily rag each and every day. So for a full update on these models and how we see these markets, please take a free trial of the daily rag. Simply click on the link below, or for the subscribers, please go to the website for your daily rag update. So what are we watching today and this week? Well, it's a big week. 3 key focuses in particular. US headline inflation out on Friday, along with core inflation. That'll be watched very closely. Is inflation rolling over? It's a big question in markets. We'll also have Michigan sentiment first estimate and 1 or 2 other pieces of US data ahead of that. Second key feature is the ECB on Thursday, monetary policy meeting followed by a press conference given by Lagarde. How's the tone? What's the future action expected to be? And what do they do this week? Will be watched very closely. And then thirdly, there's quite a lot of Chinese data out over the course of this week, including inflation, CPI and PPI out of China on Friday, and then the key lending data earlier this week. Probably Thursday. One never really knows until it comes out. So that's it from us. That's your morning market hit for Monday 6th of June. Thank you for listening. Please do subscribe to these videos on YouTube. Simply search under Short View Trading, click on the subscribe button, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe, trade well.